Alright, Brew Crew, welcome back to another video. Let's dive right in and talk about our positions, starting with Zoom. Man, this one reminds me of this other Netflix trade that I did in the chat room about a month ago. So this morning, about 5 minutes after the open, I saw Zoom trading sideways, and I thought that today was going to be a good day to capture some theta decay. So I bought the 515, 530, 590 call broken wing butterfly for 0 debit. Now I chose the 515 as the long strike because that's about where the 1272 extension is, and I wanted to see how wide I could make it and still pay nothing for it, which at the time put the closer wing about 15 points higher than that. So that's that. Now, right when I got filled was when Zoom started taking off and volatility exploded. Sound familiar? So I waited to see how Zoom would react to the 1272 extension, and when we started trading through that, I ended up just capping off the upside risk by buying the 545, 590 call vertical. This essentially rolled that 590 call down to 545 for a whopping $5 debit. I really did not like how much this adjustment costed, but in the moment, I had to do what I had to do. Afterwards, once Zoom looked like it was done for the day, I went ahead and rolled the 545 call back up to 560, so adding back that upside risk by selling the 545, 560 call vertical and taking back some of that debit. Then later on in the day, when it looked like Zoom was going to put in a topping tail on the daily when the market sell-off accelerated, I went ahead and just rolled that 560 call up to 600 and took in a bit more credit. So as the trade stands, I'm at a $2.15 debit. As long as Zoom doesn't crash, this should be easy to recover. We'll see what happens for that trade tomorrow. Now let's take a look at the next trade that I entered today, which is SPY. I sold the 310, 305 1/2 put ratio in conjunction with selling the 334 call for this Friday. This is a bearish play, and I put that on because I like that we attempted to look above yesterday's high, but then immediately failed and just sold off for the rest of the day with confirming internals, right? We had basically bodies of ticks all below zero, cumulative tick building downwards all day, bad breath, advanced decline difference trickling lower all day. And if we switch over to look at the profile on the ES, we actually made a double distribution. As you could see, there are two wider areas in the profile, which represent the areas where we spent more time trading around. It's worth noting that we started up here above yesterday's value area, but then we ended up falling out of that and going down into Monday's value area, and then building value down here for the rest of the session. So that definitely looks bearish to me. And going back to look at SPY, I think we would have a hard time getting back up into this balance area that I talked about yesterday, which is why I sold that 334 call, because that's also where the 50 MA is. And as for the 310, 305 put ratio, that's because the downside target I'm looking at is the next high volume node, which is down at around 310 and lines up with where the 200 MA is. So that's basically it for that position. We'll see what happens going into Friday. Overall, this market is definitely a bit tricky to trade. You know, one day the market's trending down and suddenly next 2 days it bounces back up, and then the next day it's just back to being down, right? And it's not like the market is crashing hard, it's just retracing wildly. And on a longer time frame, like the weekly time frame, all it is just a gradual move down probably. So the market is definitely trickier these days. And along that note, a lot of us in the chat room have moved into sort of these shorter term, basically zero DTE plays on SPX, where we would put something on for super cheap and we look to the internals and technical levels for confirmation on how we'd structure our option spreads, and we just play that spread expansion by the end of the day, which is what happened today. We put on some 132 put butterflies on SPX as we saw the market internals stay pretty bearish, as we saw the market move lower with slow tempo. We structured put flies centered around Monday's point of control on the ES, which was around 32.35, which maps to around SPX 32.45, since, as you know, currently SPX is trading about 10 points higher than the current ES contracts. And as the market slowly and steadily sold off towards that level, towards the center of that butterfly, these butterflies expanded very nicely, and we were basically able to take 30 cents to over $4 per spread. So that was pretty cool. So these types of day trades might be something to consider as the markets continue to juke people out in all directions on the daily time frame, which brings me back to my point about putting on trades for as close to zero as possible in case they don't work out. If you want to get involved with these sort of plays, come check out our chat room. It's free. Just click on the link in the description below. All right, but that is basically it for today. As always, if you have any questions or comments, feel free to leave them down below. And again, feel free to join us by checking out the links to our Twitter, Discord, and Twitch down in the description below. It's all free. We share our thoughts and trades and setups, entries, exits, all that good stuff, all that good commentary, and all those good vibes. But for now, stay safe, Brew Crew, and I'll catch you in the next video. Cheers.